Thank you, everyone. It's good to be here, and we have a lot of experience in this panel. I don't think we need to go through a round of introductions, all known names, non-faces, so we can directly get into the conversation. Agri is a very interesting subject. There are so many issues and risks that you deal with in agriculture. Water, weather, information, climate change, science, technology, any issue that you can think of, you can link it to agri and you say, okay, this issue is there. And it's a very wide sector. There are so many things you can do in it. And that's why we have a lot to cover today. So I'll directly jump into, set of questions. My first question is we can go to every panelist. And if you were to define one major impact need in agriculture from your perspective, the biggest impact need in agriculture, what would it be? If you really want, you can go to the second one, but ideally just one major impact need in agriculture. Maybe we can start with you, Augustine, and then we go.
Thanks very much, Mukesh, and thanks very much to IIC for inviting me to participate in this panel with these stellar mates in the sector. So for us, it's climate adaptation. We've seen climate adaptation, climate events affecting Indian farmers everywhere. So climate adaptation, the financing gap is huge, and it's double-fold. One of them is climate finance, where climate finance, I was reading a report from the United Nations saying that India needs $16 billion of climate finance to avoid starvation of 78 million people. So that kind of amount of money that is needed to flow from financial institutions into farmers, especially smallholder farmers, is going to be a tough challenge to reach. And the other side is not only a question of not enough financing, it's a question of not having enough solutions, and the solution for that is climate tech. But climate tech also has its own challenges. Many of the companies are still in demonstration phase. So for us, and in our previous funds, we've been investors in Series B onwards. If we want to invest in climate tech, we're going to really have to come to earlier stages. And looking at figures, there was a United report on climate tech needing that investments in climate tech is going to need to be $1 trillion by 2030 if India is meant to meet the net zero targets it has committed for. So for me, these are the biggest challenges.
Hi everyone, thanks Mukesh. I think one of the most major impact need and opportunity in Indian agriculture would be to simplifying making financing available to small and marginal farmers at an affordable cost. Financing, agriculture financing has been a perennial problem in Indian agriculture. Banks have been trying to do it, but there have been challenges in agri-financing. But there has been a lot of developments in the last decade. A lot of tech has come up which has enabled to capture data about the farmer, the farm, soil data, weather data. Banks have also matured, just not being pushed by the government, but identifying it as a market. But there is still a huge gap in making finance accessible to smallholder farmers. It's available to large farmers, but not smallholder farmers, and almost not at all to landless farmers tillers. But there is an opportunity in the sense that now we see some impact NBFCs that are emerging, which are trying to address the need, which are identifying this credit gap. But they are few, and I see that there is hope going forward with more data being available that this can scale up. The number of FCs can grow.
Yeah, to me, structurally, Indian agriculture is not going to change much in the shorter term. And so, making small farms sustainable is the core issue. Making small farmers and small farms sustainable.
I'll build on that. I run Synapses, which focuses on STEM innovations for climate, and agri is one of the subsectors we focus on. I think the big gap in, as you rightly pointed out, for agri, it is going to be about climate adaptation. And the big impact area for us is creating more independence on food, from food systems, and reducing dependence on exports, creating more local food loops, local food types, and that could be through technological intervention that allows the local genetic makeup of crop varieties to propagate and reduce the dependence on imported food genetic material. We're also, a second one, if I may add, is on seeds, creating more climate resilient seed varietals, again through a lot of genetic understanding of genetic material of seeds. Both disease resistance, climate resistance, and higher yielding crops can be made possible, which could allow India to continue exporting more food rather than importing food.
Thanks, Arvind. For me, the simple thing is to make more profits in the entire value chain. I mean, the agriculture sector has too many stakeholders. People who are on the ground have no opinions, or they don't have anything, they can do anything. People who are taking decisions, they have no clue what agriculture should be doing it. And everyone has opinion about what Indian farmers should be doing, right? I think that's the big problem, but I think there is no profit happening in the sector, at least for the farmers, right? So that's the most important thing from my perspective.
Thank you. Thanks, Dinesh. Thank you, everyone. Emmanuel, I want to start with you because you raised a big issue saying that, look, structurally, Indian agriculture is not going to change much, and more than 85% farmers are small and marginal, and it's going to remain like that. If anything, it's going to fragment more. It's not going to, we're not seeing consolidation. We are seeing this fragmentation to continue. And that leads to poor mechanization, monocropping, and degraded land quality. So a lot of issues come with that. You talked about making small farmers successful. How do you do that through investments? What investment models you are seeing that make small farmers successful?
One trend again, which is, I think, happening even without a great policy intervention, is income from multiple sources. So almost every household has 2 to 3 streams of income apart from agriculture, and together these are keeping the household running. And that is the way agri-sourced or agri-based but non-land-based activities like livestock and other things is one means to do that. The other, of course, is adoption of new seed varieties, or introducing more productive technologies, and reduction of cost of cultivation through whatever mechanization and other means. So one of the biggest costs in agriculture today is labor, and there's an immense shortage of labor, and the costs have gone up. So being able to control costs, at the same time improving productivity, and also adopting sustainable methods of agriculture. So use of, less use of external inputs. So all these combined together hopefully will make a difference for small farmers.
Is there any enterprise or investment that you really like and you see working in that direction? Any model you have seen?
Yeah, I think beyond the startup world, there are lots of people working on this. sustainable agriculture, collectives, cooperative farming, models do exist.
Okay, so I would add, right? I mean, if I take a look, I mean, India is going to a situation where people are wanting to have more processed food, right? India is at the cusp of the manufacturing renaissance. If we can get the agriculture produce to be processed at the farm gate, you can increase the value of the farm produce itself. And that is where it's going to do it, right? I believe trying to save some cost, trying to give some subsidy will be useful, but how much further below can we go beyond this, right? You will have to increase the pie, and that's how it is, right?
Sure.
I mean, no other sector grows profitable just because reducing cost. I mean, we are anyways marginal farmers, right? I mean, what can you go below this? You have to expand the pie, and that's the only way to go about it.
Good
So
point.
I'll just add to this that most assembly markets, the mandis, open at 3 or 4 in the morning, and by 10 o'clock they shut down. And if you see the amount of agricultural waste that is there after the market closes, it's actually organic matter from the village that's coming and becoming garbage at these centers. So the ability to process at farm gate and leave behind that organic matter at source itself is a great saving. And if we can do that, for village level, farm level, primary processing would add great value.
Yeah, I was going to build on exactly that. There is a lot of good quality bio waste available in the agri sector that's not being put to good use. Delhi has obviously witnessed a lot of that stubble burning causing air pollution. But if you can use that bio waste and process that into organic fertilizer, that itself is going to add to better outcomes for the farmers. The other idea I would say about creating more sustainability for the agri ecosystem is shifting to food crops that are less GHG emitting, healthier for our societies, as well as opening up high margin export markets. So a lot of farmers can do with moving away from paddy to maybe more horticulture. There are a variety of food types that get exported at high margins, and it will help both mitigate emissions that paddy is known for and give incremental income to the farmers.
I think all of you are raising an important point is more value addition. Export is more value addition, processing on the farm is more value addition. Jinesh, you have been now seeing this for more than 10 years. How much has it changed? The processing, on-farm processing, what percentage of our produce really we process more? How much value addition is really happening?
Look, I think if you compare from where I started out, things have gone better, right? I mean, it's definitely the farmers' incomes have gone slightly better than what they were, right? I mean, I see two-wheelers with most of the farmers. It's not the abject poverty in the farmers, which we still see in some photographs or TV channels. That's no longer there, right? Farmers are beginning to see value addition. Farmers are getting more information. There is definitely an improvement because of digital stack of the government. At the same time, the roads and railway connectivities have got better in the country. The farmers are able to supply to a slightly distant market and make more money, right? So things have got better. Are we comparable to any mid-market country in the world? The answer is no. It's gone better from the last 10 years, but we still have a long way to get these people out to do a next level. It's a process, right? I mean, agriculture has a structural problem, right? That you have 2 or 3 crop seasons in a year. If you get one wrong, you are losing 1/3 of it, right? So in 10 years, we would have seen 1 or 2 droughts, we would have seen a couple of floods, we had seen COVID. So considering that, we have done good enough, but we can do better.
Yeah, so Jinesh, you're talking about abject poverty not being there, but continuous cycle of debt because your crop keeps failing continuously. And continuous cycle of debt means you need access to capital becomes problem, cost of capital becomes problem. Dheeraj, do you want to come in and share the challenges of farmers there? How are you solving it or what models you are seeing? Because I mean, access to finance is a bigger problem than abject poverty, though I still believe that there are parts of India We're using abject poverty also still in farmers. It may have gotten better in some areas and some crops, but there are many parts where you still see that. Neeraj.
So, access to finance for smallholder farmers has been a problem. Government has tried to intervene, government and regulatory bodies, RBI and NABARD, try to provide regulations, RBI has stipulated that priority sector lending should have a percentage of that allocated to smallholder financing apart from agriculture financing, then a subset of that. NABARD has rural banks under it, to provide financing in rural areas. But there is a reluctance we have seen across banks to lend to farmers, smallholder farmers especially. Public sector banks do it because of the regulations. Private sector banks don't do it. They are happy to lend to large farmers, medium farmers, but not smallholder farmers. That's why, and the challenges they have are also, are to be considered in the sense that there has been a lack of data, lack of credit history, political actions like loan waivers, which harms repayment behavior. But we have seen that changing again in the last decade. The tech development and a lot of human capital talent that has come in this sector, which has allowed for creating farm profile, tracking history, tracking and recording land data. This is all available now to lending institutions. There are startups, like Satshore, which has made this kind of data available to financial institutions to help them take that call, help them in sourcing, collection. Then there are NBFCs, like Samnati, Avanti, which are using this kind of data in, extending their customer base and, including more and more farmers. So there is a hope in the future that this, credit can be made available to farmers, which are still not covered by. Then one more thing to add is that a lot of AgTech startups have also come up, which are providing a package of practices to a set of farmers and help them, grow crop as per particular, particular consideration, and then help them provide market linkage also. And they are also trying to arrange financing. While this is at a pilot scale, but it can be grown if it's successful. And there are some NBFCs which are, ready to finance this kind of AgTechs also. So there is good, I would say, hope, and I'm being optimistic here because that's what we have to, be when we work in this sector. That going forward, access to finance problem will be solved to a better extent than it is right now. Will the cost of credit problem be solved? That is difficult to say because our structures are such that banks don't want to lend to smallholder farmers and NBFCs have their own cost of financing problem. Here, the government can intervene and make cheaper financing available to NBFCs to make, cost of financing cheaper to farmers in the end.
I think Augustine wants to add something.
If I may complement what you were saying, and very much agree, I think for finance to flow to smallholder farmers, number one, you should do individual lending. That really works, and we've seen it in Latin America, and for whatever reason, microfinance institutions, for instance, in India, they're still focusing on the GLG, and through the GLG, they are not going to really see the specific needs that the farmer has individually. We are providing technical assistance because in this case, you do need to give them the instruments to be able to lend to the smallholder farmers. And it's about giving them the risk mitigation systems. It's about giving them the ability to launch a specific product for the farmer that really works in line with the cash flow seasonality of the smallholder farmer. It's also about giving technical assistance for training of the loan officers and having a portion of the loan officers that become agronomists, because otherwise they are not going to understand the risk related to lending to agriculture. And in addition to that, I think concessional capital is essential from the funds like us. And for us to be able to provide concessional capital at low really gives an incentive to the financial institution to finance, we need concessional capital ourselves as funds. We need blended finance, we need catalytic capital at lower cost that we can pass through the smallholder farmer, so the smallholder farmer is able to pay something that is affordable to them.
Thank you. Ruchira, you raised two important points. One is seeds, climate resistant seeds. And also you talked about, more high value, crops that we can export. Are you seeing investment in climate resistant seeds at all?
Yeah, in fact, that came to mind from a startup that we have been evaluating, and there are many more. There are startups that are doing, taking away effectively the R&D function of large seed companies and helping in pushing the frontiers of research on seed genetics to enable better varieties that are not just they're disease resistant, they are higher yielding, they are more resistant to changing weather patterns, etc. So, of course, some of this has to be borne out, and there will be some successes and some failures, but the fact that minds and efforts and capital is being spent on doing research work. And there are actually SaaS platforms being created for genetic research on seeds. So there are SaaS models, there's R&D project-based models, as well as new seed companies being created.
Just one more follow-on where you talked about high-value crops. Historically, Indian farmer has been very resistant to shifting what they have been growing on their field. Are you seeing that shift playing out, or is that an aspirational, theme?
Necessity is the mother of invention. I'm seeing that the current climate crisis and the adversity, severity, and speed at which it is coming to the farmer, to the societies at large, is causing a shift. There are farmers who have suddenly, over a span of a few quarters, seen soil chemistry change. With the soil chemistry change, with monsoon patterns changing, the habitual crops that they were habitual to growing are no longer viable. They are forced to shift. Fortunately today, which wasn't the case 10 years ago, the farmer of today is well connected. They are connected to the net, they're able to engage digitally in their vernacular language, learn about crop types, learn about regenerative agriculture, and there are a lot of startups that are trying to cater to the farmer community. So there is support available, there is access available because of the digital connection, and I think these shifts are beginning to take place.
I would like to add, right, Indian farmers have changed, right? Historically, we were growing grains. Our now fruits and veggies are now bigger than the grains by volume and by value. Indian farmers are changing for sure. We moved from 0 BT to 98% BT in 7 years. Indian farmers adapt to whatever the supply chain requirements are. Climate change is there. It's the biggest problem, but we'll create the biggest company from this problem. Every time there is a crisis, Indian agriculture evolves, right? We moved from a dependent country, import-dependent country, to a self-sustained country, to an export-oriented country. We probably are the leaders of agri-produce in most of the crops, whether you pick up rice, wheat, milk. We produce 25% of world's milk. All small Indian farmers owning 2 cows, in the evening they become the world's largest production of milk. So Indian agriculture is going, right? It's going in the right direction. I think climate change will impact, but we will change. What we are missing out is what Dheeraj said. Financing is important at the right cost. If you can get it right, things are getting better, but saying that, and climate in agriculture, in agriculture, climate was being done way before climate was being defined. We have got seed varietals and biological products way before the climate crisis was even being discussed by the intellectuals. So I don't think we are anywhere there, right? I think it's a question of narrative. I think this sector is there right now. Everyone looks at the sector with some bit of non-glamour, right? And the narrative, what we say, that will we change? We already changed, right? It's saying, will we get better? Will we become profitable? That's the narrative we should all make it here.
Thanks. Emmanuel, I'll come back to you, and maybe others can add after Emmanuel has spoken on this. AgTech, technology. Let's separate hype from substance. Technology is means to an end. How much technology does really benefit small farmers? I'm sure there are benefits of it, and there is a lot of it we talk about but doesn't get to small farmers. What's your view on impact of tech and benefit of tech to small and marginal farmers?
As Jinesh was saying, the Indian farmer is really smart and adopts technology quite quickly. If you go today to innovative farmers in villages, most of their knowledge they get is from YouTube. And they teach you when you go there about what's the source from which they are getting this kind of information. So things like micro irrigation, many of these have become widespread among the farming community. And maybe the one place where not much has changed is the market. So the ability to hold the crop post-harvest, the ability to negotiate the market in a manner that is favorable to them, these are some things that have not been fully resolved. But otherwise, most farmers have been willing to try technology and to adopt technology. A lot of it, the T&V system of extension was funded by the Ford Foundation in the 70s and 80s. It has disappeared. In spite of that, agricultural knowledge among farmers is quite current and up to date.
You talked about YouTube. I know that farmers also have telephone and they see a lot of data, a lot of information. I wanted to talk about AgTech. There are a lot of AgTech startups that come.
Sure.
Maybe I can bring in Augustine here. Augustine, you were talking about it outside. We were having a chat where you said, at what cost? How much money do we need to burn before small farmers really benefit or farmers benefit?
How much money, sorry?
I said, how much money do you need to burn or lose
That's true.
before the farmers benefit?
No, that's a very good question. I mean, our experience in the last couple of years in agri-tech is that we've seen a lot of companies that just become a new layer or a new intermediary for the farmer to pay, which just become irrelevant. Most of the farmers at the end of the day are not really using those platforms, And then even with the ones that are not platforms that have invested in actual value chains, we have one investment in an Indian company, very well known, that has developed a full value chain. Profitability is also not coming. Every time we talk about positive EBITDA, it's going to be next quarter, and the next quarter then becomes the following quarter, and businesses are just burning cash, And that's pretty tough with the current fundraising environment, where you need to keep convincing the investors, at least in Europe, in a high interest rate environment, to continue investing in emerging markets, in India, to really continue supplying cash to this company that is not managing to make break even, In Europe, a few months ago, risk-free rate was 4% already. So imagine the premium that investors are asking for to invest in vulnerable farmers in emerging markets, even if it is a huge and attractive market like India. So for us, we've been quite disappointed to see that many of the agri-techs are not really seeing profits, are not really delivering when they promised. I'm pretty sure other players that have a lot of, or maybe higher exposure in the space, like Ines or other players, out of the companies they have, some of them have delivered. But for us, everything we look at in agri-tech has really been disappointing so far.
Jinesh, you have a
think-
different perspective.
Look, I think agriculture is one sector, it's an essential sector, right? Just give you too much money, entrepreneurs will burn. I mean, it doesn't mean agri-tech. You give to anyone here, I mean, if someone gets you $20 million, you're going to burn, say, I'm going to spend my first $1 million in the evening, right? That has happened to the sector. I mean, we all talk of agri-tech burning out. Look at AgTech, look at SaaS companies. How much have they burned, right? No one talks about them. You just beat this poor kid agriculture, right? So it's not that, right? Entrepreneurs have become profitable. They have scaled up. We have seen successful exits to strategics, to financial investors. That's happening. Agriculture in India started in 2016-17 on a serious note. It's just 8 years, guys. I mean, we compare with every other sector. MFIs took bloody complete, it was destroyed by the one state government decision. After that, it could survive, right? Let agriculture get some time, we will come out with more successes, right? It's just a matter of time.
Yeah, I could add to that as well, because before I started Synapses, I've been at IFC for 12 years. I was running the tech business of South Asia. And agriculture is a very important sector for IFC, so I kept getting asked to show more tech investments in agri. And Jinesh is absolutely right that it was very hard to see viable, commercially viable early stage startups in the agri space until about 2016 or 17. And that's when we started seeing the curve shift. And I must say today at IFC we were proud LPs in Omnivore because we became believers of the agri space. And now agri-tech is part of my strategy under climate tech for Synapses. So I think he is absolutely right. Many times people will, in fact, this is often said for climate in general, are there commercially viable models? I think it's too soon to ask that question, and people very conveniently forget, like e-commerce. How much money did the world burn in e-commerce before commercial viability was established? Right? So every sector has to go through that cycle, and I think we are past that inflection point. In fact, 2016-17 was that inflection point of viability, and now we are in this space where we are seeing a lot of startups, there's a lot of pipeline, there's a lot of VC interest, and I would say there's a lot of LP interest as well in making sure capital flows for commercially viable models in agri.
Just go back to your IFC days. I'm pretty sure if Jinesh had come to you, you would have still asked him about exits, profits, markups. So
I did.
How do investors look at it?
I asked him that for 10 years. Mark, his co-founder, says it took IFC 10 years to back Omnivore. But we did. Ultimately, we did, because we obviously also, and IFC was a very commercially oriented investor, and I continue to have a very commercial mindset in my investing. We wanted to see that curve shift. Right? And for a market like India, agri is a very important sector, too hard to ignore.
When we started out, first people say to get 100 crore turnover in agriculture is impossible in agri-tech. To get a $100 million exit is impossible. We broke those benchmarks, right? I think those benchmarks will come and go, right? It's just a matter of time. I mean, we should tell how much money AgTech has burned, how much SaaS has burned, e-commerce has burned, and how much agriculture has burned. We probably earn a few $100 million. We just not cross billion losses, yeah.
Yeah, also because agri didn't even get that capital to begin with. Right? Like you can't burn what you didn't get. Those other sectors got a lot of capital. So, actually I think that's an analysis one should show. How much capital went into which sector in the last decade and what revenue pool was created for that. I'm looking at the IIC team for that analysis.
I'll come back to...
So, listening to you points out to a specific need, which is patient capital, having patient capital that is able to wait till these successes happen, I think is essential. And that points to different investors, Maybe DFIs or maybe more philanthropic investors are willing to wait for that time, but large institutional investors, private investors, will not be willing to be so patient, which comes into with a scale, If we really want to scale from the billions to the trillions, we do need these commercial institutional investors to commit at some time.
All patient capital is impatient, I agree.
I'll like to add here, as a foundation, we have worked in supporting AgTechs for the last 6-7 years, and we have formulated many financing programs with NBFCs and banks to provide that capital to AgTech startups, kind of a blended finance capital, through our intervention. And we have seen that this capital will continue to be required even after one cycle of financing. And, I was having a discussion with one of the investors some time back, and he said that probably for equity investors, the exit should not be 7 years in case of AgTechs. AgTechs need more time. Probably 12 years is the right time when you should think about looking at an exit.
Emmanuel, I want to come back to the farmer. What does farmer want to pay for? Does the farmer want to pay for technology, science, information, data? What does farmer really want to pay for? And what does farmer benefit the most from?
Hard to say. Just like any of us, for tangible inputs and other things, a farmer is willing to pay for seed, fertilizer. For knowledge, they have a little difficulty trying to figure out why should I pay, how much should I pay. So that is the thing, and the credibility is the whole thing. So you give me better returns, then let's share the upside. That's the whole argument. And if that is possible, and this is a cycle, so you stay with the farmer for some time, work with them, see the benefits, show the benefits, have a fair share of distribution between the two, it will happen. And that's the way it is going to be as a package. Unless startups or whoever, the technology institutions operate on the ground, this is not going to happen. Unfortunately, most knowledge is developed in some air-conditioned cabin somewhere, and that is, what do you say, earth-shattering technologies as they claim, but there's nobody to take it to the ground, and that's where the problem lies.
I just want to intervene, right? Farmers have been paying more than what they should be paying. This is one sector where if there is a good market for the farmers in the export markets, Government of India stops the export because we have to control the inflation, right? That's one. Second is that this is one sector, most of the farmers get credited 4% per month. Which industry in the world can make profit at 4% month interest cost? So farmers saying, what will farmers pay? Farmers are paying more than what they should be paying. So I think the question should be reversed. What should we do about it? We want food, and in India though, if you look at the food cost, it's such a practically free, right? You're living in a 5-star, you're paying $20, that's best, right? And the poor farmer gets nothing. So we should be talking about what can we pay more to farmers in terms of the inflation and everything, rather than saying what will farmers pay.
I would add to that, because you mentioned that farmers are not willing to pay for information. I almost feel like they shouldn't have to. If we're not getting agri-science information to the person who runs the farm, then we're doing ourselves a disservice. Information is ubiquitous, information should be free. Yes, sell them the seeds, sell them fertilizers, sell them inputs and real substances, but I don't think it's fair to even expect them to pay for information. Information should be a level playing field. The government, philanthropic bodies should try to get the best information to the farmer to equip them to do their job well.
Yeah, so I think I've been with Jinesh on many panels, and he's been consistent on this, that each one of you has to pay more for your food. That's the only way a farmer is going to earn more.
It's good that RBI is not sitting here, otherwise they will have a different perspective. But let's switch gears here. Ruchira, interesting opportunities coming at the intersection of agriculture, science, and technology. Where do you see, maximum potential going forward?
So some of the examples I was mentioning earlier, but a few others, we're seeing a lot of, there will be led tissue culture solutions that we have been looking at and backing, which promise to create more biodiversity and create local food loops. We are looking at bio-waste, waste to value solutions, both with hardware and full system solutions. We are looking at seed genetics that I talked about earlier, ways to predict and deal with shifting soil chemistries. So these are a few areas that we think, there'll be smart warehousing, there'll be better geospatial data, earth observation data for weather prediction and helping the farmer make better decisions. So there'll be a gamut of solutions, but these top few is where we are spending most of our time today.
I think we're coming towards the close of our session, so maybe one very important elephant in the room everyone can talk about. We'll come to the audience. I just want to ask one more question before we go to the audience. Is a big elephant in the room. It's impact washing, greenwashing. And the more you talk to LPs, the more you hear that question. The more you talk to people, the more you hear that question. Augustine, maybe we start from you and then others can come in because all of us have to deal with this. The credibility of what we are doing, credibility of what the whole impact community is doing.
Yes. Well, that's an extremely important question. Impact washing is currently the biggest risk, I think, for all of us who are raising money with our new funds. It's very important that we demonstrate that impact investing is really creating real-world impact compared to ESG. But many times, institutional investors, get confused between sustainable investing and impact investing. So we have to do a demonstration there, a clear demonstration that there is a theory of change, evidence-based KPIs, outcomes that are really happening, impact evaluations, so that we manage to differentiate ourselves from ESG investing. And as you know, ESG investing is under attack in the US. And probably because a lot of people are not really seeing real impact happening from ESG. One solution for this will be a clear definition of what is impact investing included in the regulations. In the European Union, we're waiting for a public consultation result that will come in the next few months, where we ask the sector in Europe, the impact investing sector, asks the European Commission to set a label that defines impact investing and how does it differentiate from other sustainable investment. And I think that's important for all of us who raise money outside of India.
Dheeraj, as a foundation, when you look at something, I'm pretty sure you have a higher bar of what difference it is making. How do you solve for this issue where a lot of things we promise and what gets delivered on the ground, how do you make sure it happens?
So for us, impact is the most important metric. Whatever intervention we do, we have to see an impact on the smallholder farmer, be it through the increase in the outreach to farmers, or increase in the income. And it is a challenge to capture all this data. But there have been, I would say, steps taken to ensure that the is captured properly, but that comes at a cost also. Our partners are not equipped fully to track this data all the time. They can track only with what they have, but not at the farmer level, like increase in income, increase in value, increase in resilience. And for that, we have realized that you have to employ an outside MLE agencies. But those agencies also we have seen do not much experience in agriculture sector. While they would have in livelihood and skill development, we haven't seen them having much knowledge in the agriculture sector, but we have been working with them and we have seen some, getting them some experience. And this data can be tracked, but it comes at a cost. And that cost is added to the cost of the project, ultimately.
We'll come back to Emmanuel. Jinesh, how do you deal with impact washing?
Look, I think we have keep it very simple, right? We are saying how many farmers are working with my portfolio company. It's actually accounting data. If I have done this many transactions, the farmers are working. Because no one's going to buy a chemical from me if he's not a farmer. If there's some sale I'm buying from farmers, how many tons of produce I'm buying from farmers? And these are actual data because everything is invoiced out. So we capture those things, we figure out what is the benefit we are getting it, because that's, you have to take a call. Like we did a study of like 6,500 farmers this year to figure out what is the benefit across various portfolio companies. And that's being done outside. You get it audited by a third party. External guys gets the data, third party audits it, and you come out saying this is what you have got it. And you actually put accounting data saying these are the MIS data, I have it. This is financially audited by stat auditors, you keep it, and you tell to world. We don't put any claim to any indirect thing saying I have worked with 3 lakh farmers and I'm touching 30 lakh lives. I don't have touched my lives, right? How many farmers are working, what they're buying, what they're saying. It's actually documented.
Ruchira, you have been both sides of the table. Would you want to go beyond this, or this is good enough?
This is, I think I would only emphasize, this is good, but I would emphasize the need for rigor, right? We have zero tolerance when it comes to inaccurate financial metrics. We should have zero tolerance when it comes to inaccurate impact metrics. I don't see a difference between, the two in how we treat them and how investors should treat them. The 12 years I spent at IFC, whether it was ESG reporting or impact reporting or financial reporting, all three were taken very seriously. We all have fiduciary duty towards the investors we take capital from, and our startups have a duty to making sure that capital is used well and the results are reported accurately and transparently. So I think it's about treating it as you would treat financial metrics and no different.
Emmanuel, financial metrics are easy to get. You have accountants, you have accounting standards, auditing standards, GST tax, everything. How do you deal with it? You actually get financial data as a debt giver, you get all of it. But do you get credible impact data from companies?
Okay, so the word impact is embedded in our name, which I think very few institutions have done. But we have not raised funds promising big things. So are we getting concessional credit? Are we getting something, a bonus? It isn't there. But we have our colleagues in the audience also. We sleep well at night because we're sure that we're not misreporting on impact. We just capture very basic metrics. How many women, how many farmers, those sort of things. So not exaggerating what we do, and then being able to report factually on what we are doing is what we rely on. And we would not like to again talk about the industry and the impact washing and all that. There may be, but at least we are sure that what we report is very faithfully captured, statistically correct, and we are willing to be scrutinized for the information we put out.
Be good to take audience questions if we have time for 1 or 2 questions. Any questions from audience? Maithili.
So, to anyone in the panel, Mukesh, I was quite intrigued by a question on impact washing, and also because Wilgrow is also in the impact space, right? And I think the difficult part is when that impact is leading to some change in input usage. I appreciate what both Emmanuel and Jinesh have said, that if you're tracking the user, yes, it's a farmer that you'll get through the accounts, the gender bifurcation, that also you'll get. And if it's output related, then through sales records, you'll be able to tell if there's yield increase. But how do you tell if less water was used, less methane was emitted? Because some of these technologies are claiming this. And if the tech is giving up these numbers, then how are we reviewing that tech? I think Jinesh, you put up here.
I'll tell you a clear example. We have a company like Fasal, right, which is measuring all the throughput, that how much water has been taken what has come out, what inputs have been given, and that's technologically monitored with calibrated tools for everything what happens out. And you figure out if you are not using this technology, what is the amount of water which is going out. The base benchmarks are easily available, right? That's easy one. If you're using technology, I don't think you can go wrong. That's how I would put in. Like the biggest challenge in impact washing is like when I say I have worked with 5 farmers and Ruchira says she has worked with 8 farmers, and together if we add and say it's become 13 farmers, of which 5 are common, that's the impact washing at an industry level, not at a fund level. So that's how I'll put it.
So again, I think we stop at do no harm. We don't go below that. So if there's a technology that is adverse to the environment or negative on impact, we avoid that. But then if we're going to try and do things which are positive and measure that, the problem is of baseline data, the possible timeline. So it requires money and investment to actually measure all those. And we can do that if somebody is going to fund all that research studies. Yeah.
So we do that. We do that every time. We do a baseline study period, no matter what happens.
I think increasingly investors will have no choice because LPs will demand that whatever metrics you report, you've spent the time, energy, and resources to measure and show that they are right. And if it means doing baselining, measuring against control groups, you do what it takes if you need to report it, or you report a different metric. So what it could result in is investors choosing investments such that they're able to transparently report actionable metrics. So we may, if it turns out that there's a technology where I'm not able to make those measurements, I may have to say no to it. But if I do it, I should be able to report on it.
Do we have time for one more audience question? Yeah. Any other questions from audience?
Absolutely.
Hi, I just wanted to understand from Ruchika ma'am, if genetically modified seeds are okay to use, then why are we seeing some silent protests against GM?
Yeah, I think if you go deeper, there are variations in how the genetic process is undertaken. I think modifications that improve yield, improve the weather resistance, or in this case disease resistance, could actually be a good thing without jeopardizing nutritional value. So I think that's where one has to go a little deeper in the science. And these independent startups that are taking that R&D role away from large seed companies, because remember, large seed companies will have a purely commercial motive, whereas independent startups can have an impact motive and still create good varieties where they make profitable models and then sell those seed types or the R&D behind the seed type to a seed company.
So conventional crossbreeding and all that is also basically genetic modification. So the problem is not with that, but of course, what is the adverse effects are not known of this kind of introduction of, let's say, a virus into a vegetable seed, and what will be its long-term impact, commercialization of that. These are the issues which have to be tackled.
Agriculture is a very vast subject. We can speak hours discussing it, but I think we must end it at some point, and we close with that. Thank you. Thank you, everyone.